fault but your fault that you haven't hit your TP yet. It's nobody's fault but your fault that you keep blowing these accounts. But it is not your fault that you've been misled. It is not your fault that you were taught to believe that support and resistance was the hidden secret. Like, okay. Now let's explain support and resistance, right? Because the thing about support and resistance is this. And I really do appreciate support and resistance because it gives you an idea of what market structure is. But today we're going to talk about liquidity mitigation, which is how banks move price and institutions move price to protect their own capital. So we're going to break this down today, right? But we're going to get into the support and resistance because I'm taking time out my day. Like, I haven't even traded. I've been thinking about, should I drop this or should I not? Should I drop this or should I not? I'm going to be honest with y'all. I've been thinking, like, should I drop this or should I not? Should I just leave them lost? Should I just leave the millions of traders in the world right now lost? Like, because, like, me dropping it is not going to affect my money if you don't have the correct mindset. I'm going to become a multimillionaire regardless. So me dropping this is not going to change the ecosystem of trading at all, you know, because a lot of you are going to see it, listen to it, scroll past it, and not take a simple 30-40 minutes out your day, out of your 24 hours to consume this good game I'm trying to give you. I don't know when's the next time I'm going to be dropping a video because I'm so locked in with trading in real life. You know, it's like I don't really have the time to educate consistently, but I can educate in my free time. And I haven't been trading much. I've just been studying. Like, I like trading as much as I study and studying as much as I trade. I love learning and consuming because when you, the more knowledge you consume about any type of activity or profession you're trying to pursue, whether it's music, hair, nails, hospital work, lawyer, anything, mechanic, the more knowledge you consume, the more essential you'll be to yourself. And when we say trading psychology and we break down how to trade, and when we hear that psychology, and I'm going to get to the point, but I need to really introduce you to a different type of mindset before I just show you how to create this. Because what I'm going to do is break down these boxes. I'm going to break down how these could give you great and damn near perfect entries. All right. There are a lot of people out here right now trying to think, should they go to work or should they just, you know, do something illegal for some money? You know, you have a lot of women in situations, they got to feed their children. You have a lot of men in situations where they got to pay this child support. You know, they got to pay this rent. They got to pay a bill and they can't afford to do it. And they might risk their freedom just due to not understanding how to simply trade. And I've been in those positions before. You understand? Like, well, I just wish I knew how to sit on my phone at home with some Wi-Fi and I could go anywhere in the world and generate an income. Like, within seconds to minutes, based on my lot size and my understanding of myself, you know, my entries, and you know, but there's only so much I could say, and I'm going to give you guys a teaspoon of wealth. All right, that's what I'm going to do. So let's break this down, man. This is like the 18th time I try to make this video. Something always happens. My electricity would go out. The electricity went out in the whole building for like 2 seconds, and like I'll record it with my mic not on. So I'm going to get to the point. But let me just introduce myself. If this is your first time coming to my channel, I'm the trader from Miami, aka the Forex Monster, aka call me whatever you want. Just don't call me while I'm trading. Do not call me while I'm trading. All right, I take this very serious. I'm passionate and I'm very sensitive about my trading. Okay, so let's get into this. A lot of us, when we first come into trading, we hear about support and resistance. And what I'm going to do is break down this. I have a little essay I wrote out. And it took me a few days to really put it together to perfection because I am a perfectionist. So when it comes to trading, they say you can't be perfect. You never know what's going to happen with the market. You know, they're like 50% chance. Yeah. But when you have your chart set up correctly, you could catch a good sell right here. You understand what I'm saying? And when it hits the equilibrium and you see it bounce, you could probably catch a nice little sell right here. When it gets in this premium sell zone, we're going to break down the premium sell zones. We're going to break down the discount liquidity buy zones. We're going to break down how you can make perfect entries. We're going to break down how you can become profitable, how you could pass that prop firm. We're going to break down how you can pass that live account. Okay? And I just really want to say I appreciate you guys if you're here. And if you disagree with anything I'm saying about support and resistance, because I'm about to get very disrespectful, you know, in a polite way though, towards support and resistance. You know, because a lot of us learn it. A lot of us pay for that course, man, and that's the first thing they teach us, and that's all they teach us. And when support breaks, they say, hey, just support broke, when really it was banks waiting for support to break, waiting for you to put that short in so they could push price up to that premium sell zone where they could sell for the highest price, push it back down to the discount buy zone where they could buy for the cheapest price, and it's back and forth. The price goes up and down. Where you going to get your money at? That's what you got to decide. Where am I going to get my money at? So if you disagree with anything I'm saying and you feel like I'm giving out false information, I'm misleading or whatever, you know, like whatever, man, I will not be offended, man. Get in the comment section. If I've ever gave you any information and has helped you with trading, get in the comment section. Get in the comment section, man. Get me in the algorithm. Hit the like button. Press the hype button. Hype the video up. Help it reach thousands more people. Don't keep it all to yourself, man, because I could have kept this to myself. So let's get into the video. Now, what I'm going to do is delete this. I'm going to remove this. So this is the setup I'm going to teach you guys how to put together on your charts. And if you follow me, let's say you're in my Telegram group, and I have a limited amount of people in that group for a reason. But if you're in the Telegram group and you know I use Trade Locker and using Trade Locker also, this will change your life overnight. Now, let's say you don't use Trade Locker. This could still change your life within a week or two or overnight once you learn how to structure it and learn how to use the same exact tools that I'm going to use to create these boxes. But it'll still change your life overnight. Just watch the video. So I'm going to break this down. I'm also going to go back to breaking down the EMAs crossing, like I did in my last video. Then I may break down how to read price action with volume. Just price action alone with volume. You understand what I'm saying? Like I'm talking about price action alone with volume. Let me remove these, right? Because this is like the key level of understanding structure in a market. Like, because when we look at movies, we look at Wall Street. You ever notice they have no indicators on the screen? When you go on the Wall Street, period, you don't really see 20 indicators on the screens. You just see price action. Now, they may have the VWAP. They may have some things like that. But can you imagine 100 years ago trying to read price action without the indicators, without the MACD, without the stochastic, without the EMAs? How would you survive in the market, man? And we're going to get into that. And that'll be based off of volume. All right. Let me just show you something real quick with volume. Let me just show you something real quick with volume. Let's just say you've seen this drop, right? You see this consolidation, right? And then you notice something. This volume has surpassed the level of all this other prior volume. That was seller volume. This one bar surpassing all of this seller volume gave us a great entry. Look at this entry. And I may make another video about that, but if you're in my group, you already know about this. But it's just like, I just want to give you the monster mindset. That's what I want to do. I don't want to waste your time, and I don't need your money. All right? But I do need you to take this very serious. Like, this is life-changing information I'm about to give y'all. So let's get into the EMAs, right? Let's get into the EMAs. And I want you guys to do this, man. If you guys got a course, you guys got a guru, you got a teacher, ask them, could they teach you how to read price action with volume? That's simply, that's it. Like, can you ask them to remove everything and just read price action with volume? And if they say it's similar to how I just told you, you know they full of it, man. So let's go. Let's do it. 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 So let's get into the support and resistance. So let's just say, and I'm not going to make it easy because, of course, we can look at the chart and see the trend was heading down a little bit. So let's do this, right? Let's go back in time. Let's go back in time a little bit. And I'm going to show you why I feel like support and resistance is a great way to understand the market, how it moves, but it's a false sense of understanding price action. It gives you a false sense of understanding price action. That's what support and resistance does. It gives you a false sense of it. So let's just say, let me give you a nice little situation. Let's go back over here. All right, this is good. Let's just say we're right over here, right? Matter of fact, I'll come over here. I won't make it that complicated. You have a support line right here. So you say, okay, support and resistance. I'm going to put my support line right here. And I really do feel like support and resistance gives you a false illusion of understanding what the market is doing. Because a lot of people become very dependent on it. And that's the issue. Being dependent on any strategy or anything somebody told you. You have to be dependent on what you know. And that's what you believe. You feel me? So let's just say we had this line because it won't be all the way down there. Let's just say we had support and resistance right here. All right, let's just say we lined it up like this. So let's just say we had this line drop and we seen this bounce. So we're like, okay, it didn't consolidate on support for no amount of time. And I'll open this up so you guys can see it clear. So after seeing this bounce right here, what you're being told about support and resistance is usually when it hits support, it's going to go to resistance. And if it doesn't break, it may go back down to support. So let's just say right here, it went halfway and then it dropped. So now you're thinking, okay, it dropped. Let me jump in the sell. So you jump in the sell as soon as it breaks. As soon as it breaks, you jump in the sell. You don't wait. You just jump in as soon as it breaks. You take the sell right here. Your stop loss is probably right here. So you take the sell. You see it come back up. You get out right here like, okay, I understand it. Support and resistance. I made a little money. So now you see it under the line. So you're not really thinking like, okay, what if it comes back into here? You're thinking it might be take another sell. Because after you've seen this drop, you're like, okay, let me get back in. This is the average mind of the average trader. So you take another sell. So you take this sell and now you see a rejection. And now it bounces up. So you're like, hold on, what's going on? I thought when it breaks support, it's going to drop. So it comes back up, and hold the whole time. This doesn't really register as I would say a guaranteed resistance yet. Now look at this retest, how it comes back up here and it gets back in. So now we have the support resistance that we had prior. So now you're looking at like, okay, it's supposed to go up the resistance. So it goes up the resistance a little bit. You're waiting a little bit. You're patient. You're patient. So you're not really looking at it like, you're not really looking at it from a point of view of, this is my strategy. You're looking at it as, okay, this is my buy and my sell trigger. Now, how do you turn support and resistance into a strategy? How do you turn this into a method of understanding price action? Now, just looking at this right here, let's just say after you took this buy, it came back down, knocked you out. So you're like, oh man, let me get back in. You get back in right here, make a little money, and then you're waiting to see if it's going to break. It comes back down, so you put a sell in right here, and it goes back up. So basically, you're making buys and sells with no type of direction. All right. So now just imagine, let's just say you bring your support down here. Let's just say you wisen up a little bit. You're like, okay, let me bring my support down here. This is my support because that is your actual support level. And I didn't move it down before because a lot of people would wait. A lot of people wouldn't move it. That's what I did when I first started. So let's say this is your support level. So you just take it. Let's just say you moved it down here and you took a buy right here. You took a buy right here, right? And it's going up. It's going up. You're feeling like, okay, I got it. I understand it now. So it comes right here a little bit. You take a sell. And now you're like, a little consolidation. You don't know whether I'm going to get out. I'm going to get out. You might take another sell and get knocked out. You might take another buy and it consolidates and you get knocked out. So you're like, hold on. Support and resistance works. But it feels like there's something I'm missing. And now we're going to get to the good stuff. All right. So now check this out. Would you rather, and let me know in the comment section, would you rather this setup right here, support and resistance, or would you rather this setup over here? Hold on, move this out of the way. Right here. Or would you rather this setup over here? Check the support. Check this out right here. Hold on 1 second. Yeah, here we go. Here we go. Or would you rather this setup over here? Look at this setup compared to the support resistance setup. Now we're going to go back one more time. Would you rather this setup? Would you rather this setup right here? Or would you rather this setup right here? Let me know in the comments. And let me know if you've been profitable with support resistance. I'm sure you have been. But let me know also how long you've been profitable with it. How many times have you took losses with it? All right. So would you rather this setup right here? Or would you rather this setup? If you rather this setup, we're about to break this down right now. And I appreciate you guys staying for this long in the video. You know what I'm saying? Like, because at first, when I used to look at this type of stuff, I'll find boredom. Because it wasn't the teacher, the way he was teaching. It was the way he was speaking about it. So I want to make it exciting for you. I want to make it personal for you so you can really grasp it. Because this is not, just because it's free doesn't mean it's invaluable. This is very valuable. I just chose to give it to you for free. All right. And this is information you can find out, look up, Google, whatever. But sometimes it's like this, right? It's like you could easily look on your phone and, you know, spend 2 to 3 minutes trying to figure out which restaurant around here has the best Caribbean food, right? Or you could just ask somebody that's walking by you, hey, any Caribbean restaurants around here, which one is the best one? Oh, that's the best one over there. Where's the burger spot? Like, just getting information from somebody is simpler than looking it up. That's the value in it. So sometimes even when people do charge for the education, I respect it. I respect it so much because I've paid for education. I learned support and resistance, but after I paid 300 to 600 and then they got the 900, I'm like, man, all they talking about support and resistance and they can't tell me nothing else. Like, I don't care about support and resistance. I care about all the money in between support and resistance. I want to catch all of that. I want to know what's going on. I want to understand what's moving price. Why is price moving, man? And they couldn't answer those questions. So doing your own personal research can really help you with trading, man, because the people around you may not be asking the right questions. The teacher may not be providing information that you really desire to know. You get what I'm saying? The information you desire to know, you may have to go and search for it. So I just want to be a blessing to y'all because the market has been a blessing to me. So let's get into this, right? As you can see right here, I have a premium sell zone. This is a zone where institutions and big players in the trading market, the ones that spend the millions and the hundreds of thousands of dollars, the banks, the whales, this is an area where they like selling at because they like selling when price is high because they can get the most. Think about something, right? Think about if you bought a product when it was the cheapest. You bought a lot of it. And then when nobody else had it, you sold it for the highest amount. Like that is profitability in its best definition. And we're trying to see that also. We're trying to see a lot of green in our charts. When we close out our chart, we want to see a lot of green, man. We don't really want to see all the red and all that. So what we're going to do is break this down. We have a breaker block right here. This breaker block is a block like where price was once, it was once a support. All right. It was once a support. And price broke right through it, especially after the premium sell zone got hit. And if you notice something, think about the type of entries you can make with this setup, right? Think about the type of entries. Let me remove these EMAs because I already broke this down. If you guys don't know about the EMAs and the strategy I try to put together for you guys, just check my last video out. So check this out, right? Now let's say it comes into the zone, right? So we have this zone right here, right? So we're just looking at what happened, how price played out. And I will delete all this and show you guys how to mark it up also. So we have price coming right here, and this was acting as a support, but then it broke through. So this was once an order block. When it comes right here and price spikes on it, which was once a support, is really acting as an order block because we're looking at it how the banks look at it. We're not looking at it how the traders look at it. We're looking at it how the banks look at it. We're looking at it how the institutions look at it. All right. So this is where price is fighting and they broke through. It came into this discount liquidity buy zone. All right. And then it broke through the buy zone and hit an order block. The last candle down before price jumped up significantly. Now look, we could really zoom in. We can see exactly what happened. Now look how I hit this order block. And it bounced right up. So imagine if you're making entries from right here to right here. Like, let me just show you something, man, because I don't really think y'all appreciate the information I'm giving y'all, man. But I just want to show y'all something, right? Imagine if you made an entry from right here to right here. Look at this entry right there. Imagine that entry. Then imagine coming back up right here, right? Then wait until they get up here. They're making an entry from right here, right? Like, look at this. Look how perfect this works. It was a major sell, and the thing about it, if you're making moves when the bank make moves, you're making the type of money that, you know, not that what the banks are making, but you're making a bigger amount of money than retail traders making moves. If a whole bunch of retailer traders are buying in on Sunday open, yeah, it's gonna have some nice money, but if you're catching that wave and the banks catch it, come on, man. I'm trying to teach you how to be profitable, man. So listen, right? Let me remove all this stuff right here. So in the middle, we have an equilibrium line. Anything above this equilibrium line is a premium sell zone, all right? And I'll teach you guys how to set this too and the perfect measurement for it. Anything below the equilibrium line is a discount liquidity buy zone. And at the bottom, we have our order block. This hasn't been broken, so it's still an order block. But once what was acting as a support is broken, that becomes a breaker block, all right? So I know it's a lot. You guys may have to rewind the video, watch it 4 more times, but it's okay, man. Like, if you just pay attention to the information I'm giving you, and if you're on a phone, I would suggest that you watch it on a computer because I'm about to pull up some good information that you may want to see. But if you're on the phone, you're at work, man, I appreciate you watching, man. So let me see. Let me get into it, man. So let me pull up some information that I have over here stored that'll make understanding all this easier. It's a quick breakdown. Then I'll get into showing you guys how to draw these right here. I'll show you guys how, and these are very easy to draw once you understand what it is. That's all. And it works the same way as support and resistance. Just to think about it like this: support and resistance is like ABC. Like, let's say you're in school. Support and resistance is learning your ABCs. What I'm showing you guys right now is like, this is like Harvard trading, basically. Like, this is top 0.3% institutional footprint, liquidity reading, bank. Like, this is, I don't even want to say too much, man. Because if I keep talking, I ain't even want to post the video. So let me just get to the point, right? What are order blocks? And let me just make sure that this is visible to you guys. Okay, this should be visible. Let me remove this equilibrium line real quick so it's not in the way. All right. What are order blocks? Instead of seeing standard support and resistance, big institutions see specific zones where they left behind massive chunks of money. An order block is simply a zone where big banks place massive buy or sell orders. If the market suddenly crashes straight through a buy zone, those big banks get trapped in a losing trade. Because big banks do not like losing money, listen to that. You don't like losing money, and guess who don't like losing money? The people you're trading against. So the chances of you losing money are way higher than their chances because you're not thinking nothing like them. You come into trade and just want to make some money. Like, I just want to leave my job. Like you got to really like understand it. You got to be one with price action, man. You got to really love this and be passionate about it so you can educate yourself in ways where you look at trading totally different. And once you trade differently from the average trader, you're going to be in that 10%, that top 0. Let me get back to the point, man. Cause see, I be hyping myself up talking about trading. Like, I'm like, I swear I'm one with price action. I'm one with price action. It just is what it is. I'm one with price action. Because big banks do not like losing money. They will manipulate the price back up to their original entry point to exit their bad trades at break even. A process called mitigation. And I told you guys I was teaching you this. Let me type it out right here. Let me type it out right here, man. Let me type it out right here. Let me type it out right here. Liquidity. Oh, what's going on with my chart? Hold on 1 second. What's going on with my chart? Whoa, hold on. Hold on, I ain't trying. Let me see what's going on with my chart. Okay. Where's the word? What's going on, man? I don't know what just happened. Okay. Let me get back here. Liquidity. Let me get back here. All right. Liquidity mitigation. All right. That's what we're talking about right now. We're talking about liquidity mitigation. All right. And I couldn't believe I was paying for courses for months, like for 2-3 months. And they telling me to recruit people. I'm like, I just want to trade. I just want to learn how to trade, man. And they never spoke to me about liquidity mitigation. Never. Like, I'm like, man, I had to really do my research. So I'm just going to bring y'all some good information that could change our lives, man. And don't expect too much more. Like, I ain't going to keep dropping. Y'all got to put in some work and learn this. Because I'm giving you the keys. There's nothing else you need to learn after this. You get what I'm saying? But I appreciate talking about trading. I love talking about trading. And just in conversation, you're going to learn when we talk. Like I said, if we ever spoke about trading, you blessed, man. Because I feel blessed just to have the opportunity to even talk about it like how I talk about it. Because years ago, I didn't even understand what it was. I just put money on Bitcoin, watch it go up and take money off. And I thought that was trading. And then I ran into the Forex market. And my life just ain't been the same since. So check this out, right? Let me get back to it. Where was I at? Because big banks do not like losing money, they will manipulate the price back up to their original entry point to exit their bad trades at break even, a process called mitigation. Once that old buy zone is broken and tested from below, it flips into a breaker block, meaning it turns from the old floor into a new ceiling that pushes the price lower. You see? So look, the breaker block is right here. Let's just say I put this breaker block over here. You can understand what happened better. You see it? So look what happened. See how price came up, dropped down. So this is the breaker block, and I'm going to show you guys how to do all of this, all right? Number 2, understanding liquidity zones. Institutions are too big to buy or sell normally, so they must find thousands of retail stop losses to fill their own massive trades. Let me read that one more time. Institutions are too big to buy or sell normally, so they must find thousands of retail stop losses to fill their own massive trades. You hear that? So they have to knock out your money first. All that money that you have underneath support, hoping that it goes back up and bounces back up, and you're putting your stop loss right below support right here, like where the average trader putting a stop loss right here. If they're buying right here, they're putting a stop loss right here. So the banks, they putting their money right here because they know one thing for sure: they can knock out that stop loss for sure. You get what I'm saying? Now let's just say now let me give you a better example because I'm thinking about it. I'm thinking about it in a different way of how I'm saying it. Let's just say right here, you put a buy in right here, right? You put a buy in right here. So now that you put a buy in right here, or let's just say you put a buy in, yeah, let's just say you put a buy in right here. Goes up, come down a little bit. You make your little money, you get out. So now let's just say you don't have this type of setup. You're just going off support and resistance. And let's just say this line right here at the bottom, this line right here at the bottom is your support. And you're just going off support and resistance, right? You put another buy in, they come and knock your stop loss out of the way. Then they can drop their money in with the money, the liquidity they're grabbing from you, which just makes it a liquidity sweep. The sweeping liquidity and basically this is what liquidity is. Liquidity is basically stop orders, a whole bunch of stop orders, a whole cluster of stop losses in the area. That's where they sweep the most. That's why you notice when it goes down here and it bounces all the way back up because they grabbed all that stop loss money and now they're dropping their money without causing any type of slippage. So let me break that down one more time to you. Understanding the liquidity zones. Institutions are too big to buy or sell normally, so they must find thousands of retail stop losses to fill their own massive trades. The red box is a premium sell zone located at the top of the chart where price is considered overvalued. Institutions push the price up here to trigger the buy stops of retail traders. Buy stops meaning stop losses. Who shorted early. Triggering those stops forces markets. Hold on, let me just run it back. I'm tripping. I started thinking about price act. I'm over here calculating money. I'm thinking, should I wait? Then I'm realizing, man, it's like when I do this for y'all, it takes me a lot to do this, man, because when I'm watching price action, I get to thinking about making an entry. Like, so let me run it back one more time. The red box is a premium sell zone located at the top of the chart where price is considered overvalued. Institutions push the price up here to trigger the buy stops, which are the stop losses of retail traders who shorted earlier. Shorted mean they took a sale. They took a sale, and a sell means going down, and a buy means going up, which we also call a long. All right, triggering those stops forces market buy orders, which the institutions instantly use as liquidity needed to fill their own massive sell orders before crashing the market. You hear that? So let's just say this. Let's say you put your stop loss right here and price knocks your stop loss out. When they grab the money that you put in the trade from your stop loss, let's say you got your stop loss at 300. So if price is at $3,000, the reason why it shoots up after it grabs your stop loss, because that 3,000 just turned into 3,300. You get what I'm saying? Look at it like that. So that's why it boosts up like this. Like your stop loss is right here. Let's say you take a short, you're taking a sell. Your stop loss is right here. Price is at, let's say it's at 2,999 right here. Your stop loss is at 300. So when that 2,999 hit your stop loss, now it's at 3,002. No, 3,002. That's the price now. It went from 2,999 and it hit your $300 stop loss, and now it's at 3,002, and it shoots up. Then it hits other people's orders. Now it's getting more money. Now it's at 4,000. Now the price is rising. Price is rising. So if you look over here, look at it like this. Look at how price acted over here. Look at this right here. Let me break it down simpler. All right. Because I can be very complicated at times. So I give it to you straight from my mind. It don't process what I'm saying at times. All right. So let's just say you took a sale right here. Let's say you took a sale right here, right? You see price come up here, and you remember that, you know, the premium zone is a sell area, but you don't have a full understanding. So you just take a sell instead of waiting for it to come up here to take your sell and to touch the tip of this box at the top. You just take a sell right here because you're so overconfident because you just made money from this buy you just took. So you take a sell right here thinking price is going to go down now, and it comes back up, it hits your stop loss. So look, the price was at 5 over on the right side of the screen. Now we look at the right side of the screen. Price was at 4,527. So when it took out these stop losses right here, look how much momentum it gained. It went all the way up to 4,585 because it knocked out all of the stop losses from everybody that was selling. So what would be the smartest thing to do if you're to make the entry? Lower your lot size so you could possibly put a stop loss somewhere far enough where banks or price shouldn't be going back to like back here. But then you're thinking like, man, if I'm trying to make a sale right here, I don't want to put my stop loss back here. Then wait till you can put your stop loss back here and wait till price get right here. That's what you have to do then. Wait till price goes to a place where if you're going to make a buy, that you can put your stop loss where price shouldn't go back anymore. That is a jewel I just gave you. That is a jewel I just gave you. So if I want to take a buy right here, but I know price shouldn't be going back down here no more, but I don't want to take a buy here and have my stop loss here, especially if I'm using a nice lot size, because from right here to right here can make me $1,000 if I'm using the right lot size. You get what I'm saying? It can make me 500 if I'm using the right lot size. It can make me 300. But if I got to put my stop loss down here, I'm risking down there $1,000 to make 300. I don't want to do that, man. Well, don't do it then. Wait till price comes down here where you can put your stop loss at in the area below where the order blocks are. You know what I'm saying? Or make your entry where the order block is. It's like, man, trading is so simple once you understand it. But some people just make it complicated because they need you to pay that fee next month. Some people just make it complicated because they don't understand it themselves. You get what I'm saying? Some people just make it complicated because they need you to depend on that signal. But it's really simple. All right. And it's trillions of dollars in this industry. It's like me teaching 1 million people is not going to cause an effect where I'm going to lose $1 million or something. Like I could still make 200 to 300K by next summer, man, just locking in with my information that I know. And what you make is not going to bother me. I'm not going to feel it. You're not going to feel what I make. This is a $1 trillion industry, man. $1 trillion industry, man. And there's somebody right now sitting down at McDonald's on the Wi-Fi, probably got 15,000 on their account, trading right now, man. There's somebody around the world with 500 on their account. There's somebody in Africa, you know what I'm saying, with probably like more than what we could imagine on an account. And they don't even know how to trade. They just want to put the money somewhere. Like, there are individuals like this around the world. You know what I'm saying? There's a young child right now, probably in his teenage years, that is doing bigger numbers than we can even imagine. We have people that don't even have social media that do this. Like when they say 20% of people, like I think they say 95% of people can't trade. I don't believe that. I believe like down there 30% of people could trade. Just a lot of people don't make it public, man. A lot of people don't have social media. Like a lot of people don't care. You understand what I'm saying? And I want you to imagine that level of wealth where you just don't care. Like, are you trading every day just for 500, for 1,000? Or do you want to have a $40,000 month, of $80,000 a month, like a $400,000 month? Like, don't you want to have conversations with the chauffeur? Like, I'm just saying, like, man, like, imagine what you could do for your kids if you teach them this. Imagine what you could do for your family. Imagine what you could do for yourself. But, you know, I'm not here to inspire you right now. I'm here to really just give you this good education, man. So let's keep going. Let me run this back one more time in case we forgot. The red box is the premium sell zone located at the top of the chart where price is considered overvalued. Institutions push the price up here to trigger the buy stops, which are the stop losses of retail traders who shorted earlier. Triggering those stops forces market buy orders, which the institutions instantly use as the liquidity needed to fill their own massive sell orders before crashing the market. All right. The green box is the discount buy zone located at the bottom of the chart where, yeah, I call it the discount liquidity buy zone because that is where you get discount liquidity, where they get price for the cheapest. You get what I'm saying? So discount liquidity buy zone at the bottom of the chart where price is considered undervalued. Institutions drop the price down here to trigger the sell stops of retail traders who bought early. This causes mass panic selling, allowing the institutions to happily buy everything up at a cheap discount. And the reason I say happily, because just imagine if gold was worth $40, right? $40. And you bought up all the gold for $40, right? And now you can sell it for $1,400. You get what I'm saying? Like, wouldn't you be happy? Wouldn't you be happy when something drops so low and you know if you buy it all up, everybody's going to desire it. You could charge what you want. That's how they look at it. So the green box is the discount buy zone located at the bottom of the chart where price is considered undervalued. Institutions drop the price down here to trigger sell stops, which are the stop losses of retail traders who bought early. This causes mass panic selling, allowing the institutions to happily buy everything up at a cheap discount and cause the sharp upward price bounce. Now, this is the psychology of trading also. And this part is very important to me. That's why I said, let me just drop this here. This causes mass panic selling. That's the psychology. That's you. Once price start dropping heavy, you start selling too. Instead of waiting for that buy entry. You could have just waited for that buy entry. Sometimes you got to step outside of everything and look at it from the outside looking in, man. But I'll break that down. I'll break that down in another video, man. Like I just can't wait. I want to get this done with so I can get back to trading. For real. I just promise people I'll drop this in. But man, I can't wait to get back to trading. Just talking about it got me so turned up, so passionate, man. Like so alive right now. Okay, listen. So how to trade. Now I'm giving you guys some like an opportunity to learn how you could trade with this zone. I'm about to teach you how to set up very shortly. So how to trade it. Let me move this up a little bit. Let me move this up. How to trade it. Buying long trades. To buy the discount, you must wait for the price to drop completely into the green box. Watch for a sharp candlestick wick to dive below the box to steal retail stop losses and then snap back up. You enter your long trade the exact moment a 15-minute candle closes safely back inside the green box. Alternatively, you can buy when the price returns to hit the mid-range green line after the mark trend swift. Oh, I'm tripping. Let me put my glasses on real quick because this is so small on my computer. Okay, let me make it. All right, that's perfect. All right. Let me run it back one time. Buying long trades. To buy the discount, you must wait for the price to drop completely into the green box. Watch for a sharp candlestick wick to dive below the box to steal retail stop losses, then snap back up like we have right here. Look what happened. It dived in the box. So if you set this box up, you have an instant, like, think about taking a trade like this every day. If you got a prop firm, 50K, 100K, 25K, I don't care if it's 10K, like, you can make great money every day. Like, you can make a living every day just waiting for it to hit this top, dropping, hit this bottom up. Simple. Like, the video over with. The video is finished, man. The video cut. The video is finished with, man. Like, honestly, it's that simple. But I'm going to take some more time out my day to break this down. And I hope you take time out your day to hit the hype button, hit the like button, and make sure you hit the hype button again if you didn't hit it. Get in that comment section. Let me know if this was a great breakdown, man. Let me know, should I keep doing this? Nah, you don't want to hear this no more. Like, you rather do support and resistance. You know what I'm saying? Liquidity mitigation is too big of a word for you. You know what I'm saying? Like, just let me know. I'm not tripping. So let me run it back one more time. Buying long trades. To buy the discount, you must wait for price to drop completely into the green box. Wait for a sharp candlestick wick to dive below the box to steal retail stop losses, then snap back up. You enter your long trade the exact moment a 15-minute candle closes safely back inside the green box. Alternatively, you can buy when the price returns to hit the mid-range green line. After a market trend shift, you must place your stop loss safely a few pips below the absolute lowest wick of the zone. So your stop losses should be right. Now, this is just my theory. This is how I look at it. This is my mindset, my thought process when it comes to this. So this is why I made this. It took my time, about the end of 2 weeks, deciding, let me just write this, man, and give them some good information. So I want you to take your time, and if you have to, just run the video back a couple times. Pause the video. And just take your time with this and set your chart up like this so you can make great entries. Your accuracy will grow. Your RRR will be better. Your win rate will be in the 80s, 90s. Now, I'm just being honest with you, man. Like, I know they told you every other trade is the average win rate is 55 to 65, man. I know they told you that. And I know the professionals told you that. But listen, we're in 2026, man. We in 2026. We are using more than 10% of our mind. Don't let them lie to you. I understand why those type of trades happen where it's a 65 to 55 because you're taking every other trade. You're still trading emotionally. But if you're trading with a based system, with the real Forex monster vision, I'm trying to give you, man, look, man, hold on, let me make this serious because I don't think y'all take me serious. I don't think y'all take me serious. Let me go and just put this right here because I already know. Man. I'm gonna see copies of this video. People trying to say they came up with this vibe, like. And the thing is, this is common information, but the way I'm giving it to you, ain't nobody giving it to you like this. Nobody's as passionate about this as me, man. And that's how I really feel. So I'm giving you guys Forex Monster Vision liquidity mitigation. That's what this is about. All right. So listen. Now, this is how you take your buy trades. Let me get back to it. Alternatively, you can buy when the price returns to hit the mid-range green line after a market trend shift. You must place your stop losses safely a few pips below the absolute lowest wick of the zone. You should take half of your profits when the price travels halfway across the chart and trail your stop loss to break even after it clears intermediate zones. Your first major target is the mid-range red lines, and you must close the entire trade the moment a bearish reversal candle prints inside the upper red premium zone. So once you jump in right here, you make an entry down here, right? Once you see a bearish candle closing the zone, like what we have right here, how this candle closed in the zone right here, I don't care if it was closing up here, get out the trade. Especially when I seen this rejection right here, I'm definitely getting out the trade, man. I would have got out like right here. I probably would have got out right here, to be honest with you. So let me get back to breaking this down. Like, I'm giving you guys some good information. I need you guys to let me know in the comments, man. Is this great information or not? Like, do you still need support and resistance in your life after getting this information? Like, this is great information, man. Like I'm excited to give you the information. Like, I'm learning it too. Like, it's because every time we revisit good information and we take notes, this is my way of taking notes. Creating this video is my way of taking notes. Every time I go back and read things I read over the last year, the last 9 months, the last 8 months, and I sit down and read it, it gets me excited because it reminds me of how far I've came. So let me get into this part right here, right? So we can finish up this video and I can teach you guys how to draw this box. So one more time, I'm gonna get back to this part. And I know this video is long, but hey, man, just pretend you in class right now. You in class right now, all right? Let the teacher speak. You must place your stop loss safely a few pips below the absolute lowest wick of the zone. You should take half of your profits when the price travels halfway across the chart, and trail your stop loss to break even after it clears intermediate zones. Your first major target is the mid-range red lines, and you must close the entire trade the moment a bearish reversal candle prints inside the upper red premium box. Now, if you want to do selling short, now this is for selling. Now that's for if you want to buy or go long. Same thing, just as different people understand it different. I say buy. Now let's say if you're selling a short trade, to sell premium, you must wait. Now listen, to sell premium, not just to take a regular sell. I'm not talking about a sell like this. I'm talking about a premium sell, like up here and catching all of this. You want to catch all of this money, like all this money you want to catch, man. To sell the premium, you must wait for the price to pump deep into the red box. Wait for a quick spike to shoot above the prominent highs to hunt retail buy stop losses and instantly reject downward. That's, oh my God, video over, man. The video could be over with right now, but I still got more game to give y'all, man. I'm gonna give y'all a little bit more game. All right. So you enter your short trade the exact moment a candle rejects the top of the red box and closes back below the premium threshold. Alternatively, you can sell when the price retests the underside of the mid-range red breaker. Alternatively, you can sell when the price retests the underside of the mid-range red breaker lines. Oh, why did I put lines, man? I'm tripping. That's because I was doing lines at first because I was thinking I was gonna do the support breaker block. All right. Alternative. You can sell when the price retests the underside of the mid-range red breaker block from below. You must position your stop loss strictly above the highest wick printed during the initial spike. You should systematically lock in partial profits as the price drops through the middle of the range and move your stop loss into the positive territory once it breaks your internal support. Your initial target is the mid-range green lines, and you must fully close out your short position right before the price hits the bottom floor of the green box. All right. So basically, what I'm telling you right here is this, right? If you're going to take a trade like this, we have the equilibrium line right here in the middle. I don't know if you guys can see it. Let me move this out of the way because if you guys don't know, whoever's in my Telegram, I'm going to drop this, and I'll drop these from my notes. I'll drop it in the chat. Excuse me. And If you don't remember what I said, just go back, go on your computer, screenshot it, or take a picture on your phone and save these notes. If you're just viewing the video, man, you on my channel. All right. So let me get this out of the way real quick. I'm gonna read it one more time for you. Just one more time, because I really want you guys to get it. This is what I wish somebody would have did with me when I was paying. When I was paying for this type of information, I wish somebody would have did it like this for me. So I'm gonna do it for you guys one more time. Now, if you're selling a short trade, to sell the premium, you must wait for the price to pump deep into the red box. Watch for a quick spike to shoot above the prominent highs to hunt retail, buy stop losses, and instantly reject downward. You enter your short trade the exact moment a candle rejects the top of the red box and closes back below the premium threshold. Alternatively, you can sell when the price retests the underside of the mid-range red breaker block from below. You must position your stop loss strictly above the highest wick printed during the initial spike. You should systematically lock in partial profits as the price drops through the middle of the range, and you move your stop loss into positive territory once it breaks internal support. Your initial target is the mid-range green lines, and you must fully close out your short position right before the price hits the bottom of the green box. So if you're shorting this from right here to right here, you want to close this out before it hits the bottom. It's that simple. You sell up here, you buy up. Man, it's that simple, man. Like, I would be upset if you still asking me how to make entries after this video. All you have to worry about is you getting out in your psychology and when you feel like, okay, that's enough money right there, and being patient, man. So let's get into how do you create a chart like this. Let's get into how you create a chart like this, man. And I'll pull this back down if anybody wants to take a picture of these notes. They go your notes right there. All right. And I'll bring this back up right here. They get your notes right there. All right. Okay, this is the part that everybody's been waiting on. I know everybody's been waiting on this part. So this is how you set your chart up. This is how you mark your chart up for accuracy. Pure accuracy, all right? Now, what we're going to do first is we're going to find the equilibrium. How do we find the equilibrium? The middle of where we want to go. Matter of fact, before we do that, we're going to set these lines for support and resistance just to show you something real quick. So let's just say this was the support and resistance. We're basing this structure off of a new structure that's forming, okay? So instead of marking up here, we'll leave that alone. We're going to start from right here. So what I'm going to do is this. Watch this. Let me show you guys something special. First thing we're going to do, we're going to go get this GAN box, right? We're going to go right here to the Fibonacci. If you're on Trade Lock, you go to your Fibonacci. Come down here to your GAN box, okay? Excuse me. So what we're going to do now, we're going to go to the top of this higher high and this lower low. We're going to measure this high and this low. We want to measure the lowest point of the new structure where price went and the highest point of structure where price went. This is how you make the same exact setup I had. It's very easy. First, we're going to set our Fibonacci. Now, the point of this Fibonacci is so we can see the 50% of equilibrium. It's a perfect measurement. So we have the 0.5 here, all right? That stands for 50%. So what we're going to do is come back to our trend lines on Trade Lock, of course. And if you're doing options, whatever you're trading on, whatever platform, just go to your tools and you can find the same exact tools 9 times out of 10. We're going to go to a horizontal line. We're going to place this horizontal line at the 50%. We'll make this a little bigger so we can see it. All right, this blue line is going to be the 50% equilibrium. Then what we're going to do, we're going to come back to the corner of this GAN box, and we're going to delete the GAN box. All right, so now we have an equilibrium line. Anything above this is a premium discount liquidity sell zone. Anything below this, no, I made a mistake. Anything above this is a premium liquidity sell zone. Anything below this is a discount liquidity sell zone. Okay, now we're going to mark it up. So we're going to go to our shapes. We're going to come right here to this rectangle. We're going to put this at this high. And we're going to go like this with it. We're not going to take it any lower than where price was consolidating at. All right. So let me see. We're going to do that right there. Now we're going to drop this measurement down a little bit to right here. This is a good spot. This is a perfect spot. All right. So now you may be wondering, why didn't I put the box to cover this wick, this small wick right here? Like, what was the sense of me not covering this wick? Because this is one of the highest points where price went, but it was pushed down. So I'm not really considering that. I have something else I'm going to put right here, which is going to be an order block. I'm going to explain that to you. Just be patient. So as you can see, I put this higher high and this lower high right here. All right. Now, this is all above the equilibrium line. So we're going to keep this just like this. We're going to name this We're gonna put a text on this real quick. We're gonna name this. Let me make this text a little smaller. That's too big. All right. Premium. Hold on. What's going on? What's going on? What's going on? What's going on? All right. Premium liquidity sell zone. So this is a premium liquidity sell zone. This is the zone where you want to make your entries for your sells or your shorts. Just look at it. Look at how price every time it ranged up here. Look what happens. Look at that major drop. Now look at this major drop right here. Look at this great short. Then you can come back in front of the buy. But you know, by the time we finish setting this up, you'll understand it better. So we're gonna make that red so it blends in perfectly. And now we have our premium liquidity sell zone right there. So this is the first part of how you can set up your top. And if you need to set this up, just come back to this part of the video. I don't care if you got to come back every day just to mark up your chart until you understand how to do it. But once you look at it for a few days, you'll understand it for sure. Now, we're going to make this equilibrium line a little bit smaller so it's not really throwing off the contrast of everything else. Matter of fact, that's what we're going to do. We're going to make this equilibrium line a small white line right in the middle. Boom. Perfect. Okay. Now, if you notice the setup, how everything's coming together, look how price just bounces off of this. All right. But notice how when price breaks it, we get very bearish vibes. And then we know that's the setup for the buy. You feel me? Like, look how everything just comes together. It's so perfect. Now what we're going to do is set up our bottom box. We're going to go back to our rectangle and our tools. And it originally looks like this. It's going to be a brush. Come to your tools, come down to shapes, rectangle. We're going to come right here. Now we're going to place the top of this box right under here. All right. So we're going to come back right here. We're going to change the color. Don't panic. We're going to change the color. Trust me. Trust me. I got this. I got this figured out. Trust me. All right. We'll come right here. Change this color to green. Change everything to green. And now you got like this virtual look. Like, this is crazy. Now what we're going to do is this. Matter of fact, let me make this box a little smaller. Let me make this box a little smaller. Let me see something. Let me come up here and make this a little bit smaller. Right there. Perfect. Okay, that's perfect. That's perfect. Yeah, that's perfect. That's perfect. That's perfect range. And if you notice, I'm basing my range off the top of this. And I'm basing it also off of, if you notice right here, how when price came back up, it was fighting under this right here. It was fighting. It's looking at this like this is some type of form of resistance. Look how price consolidates and fight right under it before it drops. You know what I'm saying? Look how before price comes back up, it consolidates before it goes through. So that is a major breaking point. So that's where I'm going to put my box. I could make it like this, though, just to make it simpler for you guys. I could leave it like this because I want you guys to structure it. Let's say if you have a high right here, if you're looking back and you see a high right here, I want you to structure it right under the point of that high before it broke down into a different consolidation. You get what I'm saying? So if you're looking at this is the high and this is the low, this is your support and this is your resistance, I want you to set it where you'll set your support and resistance. But this is just multiple mini support and resistances, but an advanced version of looking at it. I want you to see it how the banks see it. That's basically all we're doing. We're looking at it how the banks see it. So let me move back right here exactly how it had it. Okay, so mom. So as you can see, I have these parts sticking out and this part sticking out. Let me put a text right here. Just put a text right here. This is going to be a discount liquidity buy zone. All right, so let me move this right here. Make this perfect. And as you see, my chart is coming together. This is way better than support and resistance. Like, I feel like, man, support and resistance is cool, but it's just an illusion, man. It's not really trading, man. It's just like learning the basics. It's like learning your alphabet, but we're learning how to spell words and write books and essays and, you know what I'm saying, illustrate our thoughts. That's what this is. ABCs is support and resistance. This is advanced reading comprehension, what we're doing. All right. So let me go right here. Now what we're going to do, we have the discount liquidity buy zone. So when price hits this zone, we know for sure we catch a nice buy. All right. Every time. So what we're going to do is this. We're going to create our order blocks. This is how you make an order block. You're going to go right here. You're going to make a small. And once you start mapping out price and you get used to doing this, it's going to be easier and easier for you. We're going to call this an order block. Order block. And move this up a little bit. right here, order block. Okay, boom. That is an order block. Why that is an order block? Because when it broke through the discount liquidity zone, banks stepped in to manipulate price back up. And this was the best price they could have got. This is the best price they could have bought liquid. They could have bought gold for. Like, we're looking at the gold chart. So when gold dropped down here, this was the cheapest price they could buy it for. And when they pushed it all the way back up to sell it, they made a lot of money. Now, let's get back to this, right? So we have an order block right here. We have another order block on top of here. Order block right here. And this is going to be a bearish order block. Make sure we change the color. We're going to put order block in there just so you can have a visual understanding. Order block. Order block. All right, boom, perfect. We just changed the color. So we have an order block right there. So we have a nice little setup. So now we're going to create our breaker block. Let's talk about the breaker block. All right. So right here, let me see. I could place my breaker block right up here also. Let me see something. I can put a breaker block right here to let me know this is where price was fighting, and it was a support at once, but it became a resistance. So we're going to call it, this is a breaker block right here. So let me go to my text. Call this breaker block. Breaker block. This is your breaker block. I'm just showing you how to set up. I'm going to show you how to trade with it. All right. Breaker block. All right. So breaker block meaning when it left the sell zone, it acted as a support once more, but then it finally broke through. So this is no longer an order block. This is an area when price hits here, it's an expectation. It may break through again. All right. So now, let me see what we have over here. I could set an order block right here. Let me set an order block right here. Hold on 1 second. And it can be temporary. Like when you set these and it breaks through, you have to change it to an order block. So if you have it green at first, like if you have it like let's say you have it where it's an order block where you feel like, okay, prices, and it's but remember this, first of all, anything above this equilibrium line is 50%. Let me write equilibrium. Anything above this equilibrium line, you should be looking for sales, not buys. So 50%. Because I don't want you guys to get in the habit of just having this amazing setup. And now you think anytime you can just take a trade whenever you want. You have to be precise with this. You have to be strategic with this. Like, don't worry about the strategy. Just be strategic. You know what I'm saying? So this is what we're going to do. Now I'm going to put an order block right here. Let me put an order block right here. And this is going to be a bullish order block because we've seen price hit here and it pumped up very, very high. And we haven't seen it break this equilibrium a third time. It broke it one time, came back down twice. We want to see it break a third time before I turn that to a breaker block. So this is how you create an amazing setup. And there we have it, you guys. So with this setup right here, this makes your trading more precise. Like, we went from support and resistance to creating a layout that has no other like purpose but giving you an understanding of price action, what's going on, right? So let's just say let's just say we want to make it even better. Like, let's go to the volume. Let's add the volume real quick. So we add some volume to it, so now we can really see what's going on. Let's just take a look. Let's just take a look at how the institution leave footprints, right? So let's just say you want to get in right here. Let's say you want to get in on a trade right here. And I'm going to remove this equilibrium line so you can see pure price action. So let's just say you want to get in right here. Let's say you have this setup, right? And now let's watch volume. So let's just say it's going up. You're like, okay, they grab liquidity from the box that the Forex monster told me about. It's about to go through the moon. But if you're paying attention to volume, right? Just say you're paying attention to volume and you see this big bearish candle come, you should know, hold on, that may mean it's not going to go up that far. So let's just say you see this bullish candle of volume come up right here. Let me make it bigger. You see this bullish candle of volume come up right here, and it doesn't surpass the seller volume. that means there is less buying volume than selling volume. And this is how you read price action with volume alone. All right. So being that we have bullish volume that doesn't surpass seller volume, that means there are more sellers present. So then we have seller volume that doesn't surpass buyer volume. So this is looking like an accumulation, to be for real. So now let's look at this. Now we have two bullish candles pump, and this is a consolidation happening right here. It's moving sideways. Then we had red seller volume outdo these two volumes of bullish behavior. So this is bullish volume right here, which I like calling bullish behavior. But they didn't surpass these. Now let's just do a count real quick. 1, 2, 3, 4, 5. Now we have 3 of these bullish candles. All right. But we have 3 of these bullish candles, but we have 2 bullish candles that are surpassing these right here in the middle. And then we have one that doesn't surpass this, but this one didn't surpass this bearish candle. So that's telling us right there there's going to be a great drop happening soon. We don't know when, but very soon. So let's say we just would have been patient, because I always say during the consolidation, just be patient. Wait till the consolidation break, man. Just to be on the safe side. Now, if you get to the point where you could trade during consolidation, my hat is off to you. Like man, you are amazing. But me, I'll wait till the consolidation break. That it's to the point where I've been getting so accurate with my trading where consolidation is my only, it's like my Achilles heel, It's like my weakness. You get what I'm saying? So let's just say what I've learned to do is watch volume. So now I'm watching volume. So instead of me taking a buy or sell, when I see this big candle pump right here, this big volume candle pump right here, or I just see it surpassing this green one, I know, okay, it's time to jump. So let's say I get in right here and catch this nice little scalp down. But then I have this order block already set. Now, prior to this happening, I wouldn't have known to put my order block here. I would have put it after. But after it hits this bottom zone, which is discount liquidity, this is where I make my entry. I'm making my entry in here because look what happens when it gets this discount liquidity, where it can get priced for the cheapest period. We get a nice pump up. And what told us this was going to happen? Look at this volume compared to this volume candle. Now look at all this volume. We have a lot of seller volume. We have it pushed down. This bullish volume candle did not surpass the seller volume. We had more bearish volume. We had bullish volume, bearish volume. Then we had bullish volume starting to pump. This would have been the first sign. But then we had seller volume starting to pump. And this is a consolidation. But look at this. This is nearly about this. This is what you would consider damn near a doji. Damn near. You get what I'm saying? So look, we have a lot of volume pumping. We have a major surge of institutional volume pumping through. But what would have told me right before this happened that this was going to happen, when I seen this small green candle right here, when I would have seen this, without have seen all this conviction of volume behind the small, look at this candle. Let me make this bigger so y'all can see it, because I keep forgetting you guys are looking at it through phones and TVs. So when this volume right here surpassing the height, and let me get a line real quick. I'm gonna give you guys a good breakdown while I'm in the zone, because I can't wait to finish this so I can start trading. Man, I might drop a video next week for y'all. I just get so caught up trading. You guys might not see me for a month, man. So just take advantage of this. So listen, right? Look at this volume now. We have this volume surpassing. Let me bring this down a little bit. So I really want to show you guys this. Boom. So look at this white line. I'm gonna make another white line. Let me get another white line so you guys can really see this. Now I'm gonna put this. Now this matters. This is what matters in volume. Now you probably really can't see it too well, right? You probably really can't see it too well. But if you look at this white line right here, you notice this is the height of the seller volume. Look what happened right here. Look at the staircase pump. We had this pump right above. We had this green volume pump right above the last 4 candles of volume, period. And then we have more green candles in the calculation of 5 than we have, period. Like, look at this. We have 1 green candle, we have 2 green candles, and we have 3. Out of the last 5, we have 3, which is greater than 2. Now we have 2 red volumes, but we have 3, and they're all surpassing. That is the cheat code to knowing it's about to be bullish behavior, a big institutional pump. Now look what happens right here. We have volume. We have this. So we have this calculation happening right here. We have 3 greater than 2. 1, 2. We have. So this is count. I want to show what I mean by 3 greater than 2. We have 1, 2, 3, 4, 5. So we have 2 seller volume candles in the midst of 3 other bullish volume candles. So the next one that popped was this one. Look at this volume popping. All this green volume. And it surpassed the height of the last height we had on volume. So look what happened after that. A big institutional push. So what happened after that? It looked kind of like a doji forming, which usually means indecision, but the decision was bullish. Now look at this. Now look at this big surge of volume we have coming in. Now look at this. So when you follow volume, it gives you a good idea when to get in, when to get out. You know, and how would you have known to get out right here? Easy. Look what's happening. It's going into a premium liquidity sell zone. That's why you get out. So having your chart marked up like this is so, man, it's just so essential to the trader's mind, like, because it gives you great vision and great understanding of what's going on in the market. And especially if you come and throw these on, like, let's just say you want to turn all the way up and you throw your EMAs on. Just, man, hold on a second. Let's say you throw your EMAs on, right? And if you paying $500 for a course, man, $300 for a course, man, like, I don't know why they didn't teach you this first, like, but of course they're not gonna just teach you this because they either don't know how to use it, or it's just easier not to teach you something where you won't need them next month. So I'm gonna give you this good game. So instead of wasting money, man, you can just get straight to it and start making money. You dig what I'm saying? So let me show you how to set these EMAs real quick. This is the EMA 9, which is already set. So we're gonna open another EMA, but we're gonna make it a 21. 9, we're gonna come right here and make it a 21. We'll go to set. So how to turn it to a 21, you go to EMA, click the 3 buttons on the 3 dots, go to settings and go to length 21. It counts the last moving average percentage of the last 21 candles. So basically the EMA 9 counts the last candles in comparison to price, and the EMA 21 counts the last 21 candles in comparison to price. So what we're going to do, what I like doing is making this white, because it's very easy to explain to everybody that's in my Telegram group. You guys already know white. That's what I like using for the US dollar. The EMA 21 is a representation of the US dollar. And the EMA 9 is the representation of the instrument you're currently trading. So let's just say AXAU USD gold. The blue line represents gold, and the white line represents the US dollar. So as we can see, every time the EMA 9 crosses below the EMA 21, we're getting bearish activity. Like, trading is so easy. Like, they tell you it's not easy, it's hard, it's complicated. The psychological part is the hardest part, but to me, trading is simple. Maybe it's because I've been putting in over 12 hours a day into this for the last year. Like, I've been trading, looking at the chart. I done went broke looking at the chart. I get mad looking at the chart. I get happy looking at the chart. My birthday, I'm looking at the chart. Christmas, I'm looking at the chart. Like, any day, every day, I'm looking at the chart. Even on weekends, I'm looking at the chart. If the Forex market not open, I'm looking at crypto. Once you get to a level like that with it, where it's something that you dream about, where you think about it, like while you're doing other things, you can't wait to trade. I'm talking about even if you ain't got no money, you can't wait to take a demo trade. Like, when you get excited about taking a demo trade, hold on to that passion and transition that into your skill. Because the demo prepares your entries. It prepares you how to deal with stop losses. Of course, it's not the real thing. But don't ever let nobody tell you, oh, no, I don't practice on a demo. That's no, practice on the demo, man. If you got to practice on it for 6 months. You know what I'm saying? What prop firms taught me was discipline. It taught me risk control. So when I go back to my live, I could really do my thing. You get what I'm saying? But never let nobody tell you what to do with your trading. They could suggest, they could give their opinion, but you do what you feel you need to do most. So as we can see, when the EMA 9 crosses below the 21, we have bearish vibes. Simple. So if you're right here and you want to take a nice little sell, when you see this crossover, you know you got a great sell coming. You get what I'm saying? So we can use these EMAs to really tell when to take the entry. Now let's say it gets in the zone right here. You're wondering, man, should I take the sell right here? No. You wait till the EMA crossover and take the sell right here. And look at this. I mean, I'm giving y'all so much game. I'm giving y'all too much game, man. I'm giving y'all too much game. I need y'all to like the video, drop a comment, press the hype button, man. That's all I'm asking for you. I don't need your money. I don't need your subscription. I don't need you to recruit nobody. You ain't got to bring 3 more people. You ain't got to bring 6 more people. You know what I'm saying? I just need you to hit the like button, share, and remember the Forex Monster. Remember the trader from Miami. You call me whatever you want. Just don't call me while I'm trading. Just remember that. That's all I want you to do. And let me know in the comment section, how has this helped you? That's all I'm asking you. So So let's get back to it. And I'm about to finish this up real soon. I'm just breaking down the EMAs. Let me take these white lines off so it doesn't confuse anybody. All right, let me take these white lines off. All right. So as we can see, we have a perfect chart. Now this is a perfect chart. So imagine, so let's just do this one more time, right? I just want to show you guys something one more time. So look at it like this. Let's just say we take off everything right here. And also what I was saying to you guys, for a bearish vibe, if you want to take a sale with the EMA 21 and 29, I mean the EMA 21 and the 9, when the blue or the EMA 9 goes under the 21, that's your sale, man. When it comes down, it hits that discount liquidity zone, and it crosses back over the 21, that's your buy. Look at this. Look at this. Just look at the simplicity. It crosses under, sell. It crosses above, buy. It crosses under, sell. Like, I can't, man, I don't know, man. I don't think y'all appreciate me, man. I don't really think y'all appreciate this, man. I don't think, and it's like I speak to people on a daily basis that show me their appreciation. But it's like, I don't think everybody's going to appreciate this. But for the people that do and take their time and watch this, I appreciate you, man. And I need you to appreciate yourself for wanting to be better. That's what this video is going to do, make you better. But let's just take a look at this real quick. Let's just say we remove the EMA 21 and the EMA 9. And we just put support and resistance. Which one looks better to you? This right here, this setup, or this setup? Y'all let me know below, man. But I'm about to get up out of here. I got to do some trading. It's the Asian session. And I really have been doing great in the Asian session, but I'm really waiting for the London. But I'm going to mark up my charts and load this video to YouTube, man. I appreciate y'all. Keep a monster mindset. And just remember one thing, man. Remember one thing. Before you get back in a trade, remember why you got out. And before you get out of a trade, remember why you got back in. Monster.